I'm Greg Hunter. Welcome to USAWatchdog.com. With us, somebody that many people have been asking for me to get on. I've had a couple of requests, but this one is one of my regular guys, and he knows a lot. And he's with JSMindset.com. He's also a gold broker expert in lots of markets, financial writer. Without further ado, Bill Holter is coming on from Texas. Bill Holter, thank you for coming on after a pivotal day, after an awful week on the markets that we've been warning people about. Bill, thanks for joining us today on USAWatchdog.com.
Thanks for having me, Greg.
Let's get right out of the gold. Let's start with gold for change. Gold was whacked on Friday because this is the early Sunday release, right? So just last Friday, 60 bucks. Silver lost a buck and change. But yet gold is still up for the month, about $7, 0.5%. Can't say that about the markets. Should people be worried about holding hard assets at this juncture?
No, not at all. What comes is a credit problem, and your protection against the credit markets coming down is asset money, if you want to call it that. Gold and silver have no liability. They're not issued by a central bank. There's no promise of that has to be kept in order for it to perform. Gold and silver are simply evidence of capital, labor, and equipment already used to dig it out of the ground and mint the bar, the coin, what have you. Whereas whether it's dollars or euros or bonds or what have you, those are all liabilities of whether it be a central bank or a sovereign treasury or what have you. They all carry liability, and that's what the problem is in today's world. It's a world completely awash in liability.
Oh, that's good. That's what I've been saying. I said the financial aspect. I don't know what about the medical aspect. Okay, although the reports look awful about the medical side and how bad it is and who's lying and how much are they lying? Are they underestimating? Okay, but the financial reports are solid, and this is about the ability to service debt, and first and foremost, China with their 40 trillion and the rest of the world. I mean, isn't this about the ability to service debt with the economies of the world grinding to a halt, or at least having a big boat anchor on them?
Right. When the coronavirus first came about, that was my first thought, and I've been talking about that now for 3 or 4 weeks, is that I'm not an expert in the medical field. I can't tell you how devastating it's going to be. But the reports of city after city being on lockdown, that means things are not being made. It means factories are not producing. So it affects, obviously it affects supply. For example, what was it? Audi stopped producing their electric car because they can't procure batteries. So that whole assembly line is shut down. And basically the world, with the amount of debt in the system, the world is living month to month, if you want to call it paycheck to paycheck. And when the real economy has even just a hiccup, and this is more than a hiccup, when the real economy slows down, it doesn't create the cash flow necessary to service the debt. And that's the problem in the credit markets. And obviously the problem in the real markets is actually getting goods. And we just heard the first story today of, and I don't know which medicine it was, but some type of medicine that comes from China is become scarce or not available. So the real problem is the real economy slowing down. And to be clear, it was already slowing down in the fourth quarter. So that's prior to the coronavirus. You could see that in trade numbers. You could see the slowing across the board. Then you have the coronavirus hit, which is an additional hit to the real economy, which in the end cuts cash flow. And we're already on a razor's edge as far as cash flow being able to service debt. And that's evidenced by the world had to go to in many instances, negative interest rates so that the debt could be serviced.
And then we have the well, there were people predicting that we'd have a crash in the fourth quarter of 2019, and I think we had one. They just paved over it. They had 60 billion a month, which is still going on. QE.
Right.
The repo market went cuckoo. The Fed took it over, and they put 500 billion. Fed took on 500 billion at least officially on their balance sheet. So, what? And then we have the coronavirus. How bad do you think this is going to get?
I think ultimately you're going to see a credit meltdown. Greg, it's important to note that gold started its move and broke out from the 1300, 1350 level. It started literally on September 18th. That was the day that the repo market broke and rates overnight shot to 10% until the Fed stepped in. So basically the Fed has done, well, they're calling it not QE, but they've basically QE'd, like you said, roughly $500 billion. Their balance sheet has expanded. And very interesting that this past, I think it was Monday, JP Morgan came out and said that they would access the discount window so that other banks wouldn't be afraid to access the discount window because of the stigma attached. If you remember back in 2008, anybody who stepped up and borrowed from the discount window, they were immediately thought of as an upside down insolvent bank.
Which they would be.
Right, exactly. But my point is, JP Morgan just this past Monday said that they're going to start accessing the discount window because they have a fortress balance sheet and there shouldn't be any stigma from borrowing directly from the Fed. And my thought is they want to borrow directly from the Fed because the repo market is broken. And Greg, one other thing on the repo market, it's important to understand that the repo market is the shortest of loans. It's supposed to be overnight. And any credit market is going to affect all credit markets. So if something went wrong in the 30-year, it would work its way backwards. If something goes wrong overnight, it's going to work its way forwards. So in other words, you can't have the repo market break without affecting the rest of the credit markets.
And you think, as a result of this, we get a bad mamma jamma credit freeze bigger than '08?
Oh, yeah, multiples. I mean, this is
Why?
Well, for one reason, there's more debt in the system. There's more debt. If you look at any ratio, there's more. Every debt ratio is higher than it was in '08, and they were able to save it at that point by jamming rates to zero. Where can they jam rates now? I mean, the Fed Chairman Powell came out today and said they're going to use all their tools. Well, the only tool they have basically is to lower rates and continue printing. We've said that all along. But the question is, how far can they lower rates this time? Zero is pretty close to where we already are.
On Friday he was, I guess, trying to calm the markets, but really it almost appears like he's exposing how little gas they have left. Am I wrong? Could you give us your thoughts on that?
Well, I 100% agree with that. That's what I was just mentioning. Is that they don't have any tools. There's no tools left. The only tool they have is just shove money into the system. And obviously that's they're going to ultimately dilute the system. The problem is if you have business A has to pay business B and business B has to pay business C and all around, in a circle, what is the Fed going to do? Are they going to step in and make payments? Remember, we're talking about the real economy now. We're not talking about bank to bank to bank. The real economy, the Federal Reserve, at this point, they lowering rates or jamming money into the system is not going to put people back to work. It's not going to create cash flow.
So, how is the Fed? I mean, they're talking about jamming this thing back up and having an emergency meeting of central bankers on
Right.
Sunday, and the Fed. Some of the people in the Fed are saying, well, we're not going to cut rates. We're not ready to cut rates. I guess they don't want to use their last three shotgun shells. A Mad Max scenario. Maybe they could club you over the head with a shotgun, unless they really need to use it. I mean, what do you think they're thinking after this kiboshing, the fastest drop ever in the shortest amount of time on the stock market? What do you think they're thinking about? If they're Some of them are saying we're not going to cut rates, and other people are saying, well, we're going to use our tools. What do you think? What do you try to give me what your future cast is?
Well, obviously, one possibility, and Bank of Japan, the Bank of Switzerland, uh, the Finn Central Bank, they've already been buying stocks. So you very well may see central banks step up and buy stocks. At this point, the Bank of Japan already owns 80% of the ETFs that are outstanding in Japan. So will there be a coordinated effort? Yeah, I'm sure they're going to throw absolutely everything they possibly can at this to keep it from melting down. But the markets are bigger than the central banks.
Just to back you up on that, I'm pretty sure Janet Yellen was quoted recently of saying, at the next recession, the central banks are going to, the Fed's going to have to buy stocks. I think they already are, right?
That would be my guess. I mean, I'm sure the plunge protection team was in every single day this week.
And they couldn't stop it.
Right. And they ended up with a 13% drop. And don't forget, now here we are, this was the fastest correction in all of history. Never before had this happened. 1929, even 1987, the one day came after a slow, not I shouldn't say slow, but after a few weeks of choppiness. This went from all-time highs to down 12, 13, 14% in 5 or 6 trading days. So
and they were in there putting the brakes on. Likely, you think that they were in there putting the brakes on. They still got the fastest drop ever.
Right, absolutely.
Oh my god! Oh man, that's bad. I'm laughing, but of course it's not funny. But that's bad. I mean, that's unless you think they weren't in the markets at all. The plunge protection team wasn't involved at all, which is come on.
No, that's foolish to think that they're not. I mean, they're doing everything they possibly can to try to keep this thing afloat. I mean, today's hit in the gold market, obviously, that was if you want to call it official, that was an official movement because they don't want people getting the idea that your safe haven is gold and silver. In other words, they tried to steer investment away from gold and silver by smashing it with paper contracts.
And what would you tell people that we got silver at 16 and change now? You can now get a silver eagle once again for less than $20 with
Right.
commission with premiums.
Yeah, back up the truck because, like I said, gold and silver are no one else's liability, and that's what the problem is in this system. Is it's a wash in liabilities. No matter where you go, whether you put your money into a bank or directly into a treasury bill or note or what have you, anywhere that you invest your money, you have counterparty risk. With gold and silver, there is no counterparty risk. It is asset money. And Greg, this coming weeks going forward, I'm sure there's all kinds of margin calls that will be, forced selling, if you want to call it that. So this thing could become, a self-perpetuating spiral.
I mean, if the Fed does step in, it could be like the Alamo for them. They could get over. I mean, they don't have 5.5 or 5.25% like they did in '07.
Right.
They didn't print massive trillions and trillions of dollars. I mean, one professor pegged it at they pumped in 29 trillion, all told.
right.
I
They
they
don't. That's what I mentioned before. I mean, 0% is very close to where we are right now. They don't have the leeway that they had back in 2008, 2009. And they were lucky then to get away with it. The markets are going to call their bluff. And that's pretty much what's already happened is that the markets have called the Fed's, the central bank's bluffs.
I
And
mean,
we do
you're telling me
fully,
that there's no bottom here.
basically, that's correct.
A bounce and a cliff dive into a pool with 2 inches of water.
That's a good analogy.
I interrupted you. What were you going to say? I interrupted your train. I thought you were saying, and
Yeah, the global yield curve now is fully inverted. And I've mentioned this before that we've had in the US, we've had recessions before where there was no yield curve inversion prior, but we've never had an inverted yield curve that was not followed by a recession. And the problem now, we can't, the system, the financial system won't be able to stand in a recession. There can be no reverse. It's either, like Richard Russell has always said, or had always said, inflate or die. If they don't inflate, the system will implode upon itself.
you had people like I was reporting on this a while ago because I'm trying to. I don't want people to take my word for it. I want you to take people's word for it, like you, or like Ray Dalio, who's running $160 billion, and other people at Davos, who one guy came out and said, silver, and he runs a huge fund. I can't remember who it is, but he came out, excuse me, no, silver. So we should buy silver.
Right.
Which, and even you see it go down a day and think, oh, he's stupid. He's buying probably more. But Ray Dalio was talking about buying gold. The guys at BlackRock in the last 2 or 3 months buying gold. We're buying gold. I mean, these guys are not stupid. I mean, I don't think, do they care about this? You think big money's gonna do what you said and back up the truck to the loading dock, or is that what's gonna happen?
Yeah, I think within a very short period of time, you're going to see swings of $200, $300 in gold and $5 or $10 in silver, just from the standpoint of there's so much paper that's been sold versus the limited amount of real physical metal. There's going to be a cash call, and that cash call is going to expose the fact that there's, pick the number, 300, 400 paper ounces represented for every one real ounce that exists.
Were you the one telling me that, I don't know if you or Kirby, that they were really close to having a default in the gold market? Wasn't that you?
No, what I believe is they've already defaulted. That's why they have to do these EFPs. The exchange for physical, I mean, they're doing 1 million, 2 million, 3 million ounces every day of gold and multiples of that in silver. So the numbers that they're doing, the exchange for physical that they're shipping over to London, are just, look at them on their face. It's fraudulent. There's just no way. Last year, I believe the number was 6,700 tons of gold were supposedly delivered from London. I mean, really? You compare that to supposedly the biggest holder in the world is the U.S. with 8,300 tons. Does London really have the ability to deliver 6,700 tons of gold in 12 months? Not possible.
So you think they're covering up every way they can the amount of gold in their vaults, and they're trying to suppress the price? Why? Please explain it for us all. Why would they work so darn hard to suppress the price of gold and silver?
Because, well, that's simple. The common man understands if you got $5,000 gold, that means the dollar's not worth a damn, or the euro's not worth anything, or the pound, or what have you. going all the way back to, I mean, go back to 1971 when Nixon closed the gold window. What was happening was the dollar was convertible, and what happened? It got converted, and the reserves went from 20,000 tons down to a little over 8,000 tons, and they closed the window. Gold is the anti-dollar, the anti-fiat. Gold is real money, and these fiat currencies are imposters, and they do not want anyone, or as few as possible, to understand that these fiat currencies are in fact imposters.
And I was, China has they got 40 trillion in debt, and I think you were the one you were telling me this, though, that their real number is about 20,000 tons.
I think so. Yeah, I think
I
you
mean,
can.
you did the math on this, right? You're the one that did tell me that because somebody told me. I said, they have about 20,000 tons, and they may have to deploy the tons. Now, let's just get this straight. So, you think China does have in the
I,
neighborhood of 20,000 tons if you do the math on how much they've been importing and what they've been mining and not selling?
right.
You think it's at least
At
20,000
least.
tons?
At least.
Okay, so
And Greg, see, that's the key. On a central bank's balance sheet, the only asset that they have that they can mark up in value to fill the black hole of deflated credit is gold. That's the only asset that a central bank can mark up to resolve or fix their balance sheet. There is nothing else.
so let's just say that China is pumping out all this yuan, they're bailing out their airlines, they're bailing out everybody, they're handing out money already, reports of, and people stop taking the yuan. Would they be forced to back their yuan with this 20,000 tons of gold? Would they be forced to do a hurry up offense because they can't let their currency, turn into confetti?
Well, I think they would. They will not make it convertible. I don't think there's ever going to be another convertible currency to gold. And the reason being, when you make a currency convertible, it gets converted. People want the gold as opposed to the paper. But I do believe that they will mark the price of gold up drastically and say that X amount of tons, whatever they actually do have. And I've said this for years. I do believe that at some point in time, they're going to come out and they're going to say, look, we have this. Everybody's got to put their cards on the table. How much gold does everybody have? And that will create some confidence in holding that currency because the nation actually holds gold.
Woo. Um, we're probably going to get some type of coordinated effort. I don't know how bad it's going to have to be because the Fed they're wiggling on this, and we got tools, and we know what the tools are, and some people on the Fed are not wanting to cut rates. I guess they want to keep their powder dry for something much worse. But we're going to get a bounce out of this market at some point, right?
I believe so.
Would you be selling into the bounce
General equities, absolutely.
because?
Well, because mathematically, the central banks are going to be overwhelmed. Look what happened after uh, the 2008 episode. The world, in order to keep it going forward, had to live on literally trillions of dollars every year. If those trillions of dollars weren't printed and put into the system, we would have already melted down. It's inflate or die. Think about the U.S. If the U.S. was not running $1 trillion a year in deficits, that $1 trillion per year would not be in GDP. So instead of having 2 or 3 or 4% growth, you'd have 4, 5, or 6% decline year after year.
Do we?
It's living off a credit card is what the world has done collectively.
Credit
And
crisis.
the credit card's going to get shut off.
Ah. So, and I want to bring up that because you've been big on this, and I want the little guy to get this story. You've said it before. So, credit card is going to get shut off. So,
Mhm.
we're going to have a credit crisis. What does that look like? Do you go to your bank and they're sorry, bank holiday, and you try to take your card with a little chippy poo in it and try to go buy gas and it goes declined? What happens in a credit crisis?
Well, that's the end result, if you will. But what you're seeing, or what you've been seeing in the repo market, is Bank A doesn't trust Bank B, so they're not putting funds into the repo markets. That's the start. That is the initial phase, if you will, of a credit crisis. It's the credit only functions if there's trust. And that's where we are now, is that trust is breaking. And once trust breaks and banks don't deal with each other, the whole edifice comes down. And like you said, yeah, your credit card's not going to work, your debit card's not. Credit will freeze.
You just had a little freeze there. You actually had a freeze right there. Your credit card won't work. Your debit card won't work. Your credit was freeze. Is that what you said?
Yeah, the credit markets will freeze up, and that, again, that's just a function of the lack of trust of your counterparty.
How long
And
could
so,
it freeze up for this time?
oh well, I mean, it could be 2 weeks to a month. You could see it frozen for 3 to 6 months. It's hard to say. And speaking of credit, I'm sorry, counterparties. Think about the derivatives. Think about what happened to derivatives this week, Greg. I mean, they're talking about $4 or $5 trillion worth of stock, outright equity valuation drops. You can multiply that by some kind of number based on the amount of derivatives outstanding. So, I mean, maybe it was 10, maybe it was $20 trillion in derivatives that shifted from one side to the other. And you don't know, who's upside down and who's not. And that's why trust breaks, because nobody knows who's solvent and who's not. It's an orgy. I mean, it's a financial orgy, and you have to wonder, which one has the disease.
Um, in this type of scenario you're talking about, I mean, cash would work pretty well. I mean, you're a gold broker. You work for Miles Franklin, or you work with them, I should say.
Right.
You are expert in that. You ran brokerages before. In this case, I mean, something real simple like 10s and 20s and 50s would work good.
Um, in my opinion, cash, small bills, 10s, 20s, small bills will actually go to a premium for a week, 2 weeks, but it won't be very long before people figure out, hey, I'm not giving you something real for a piece of paper. So if you're sitting on actual cash, my advice would be, once this thing breaks, spend it as fast as you can, because it's not gonna spend for months down the road. People will figure out it's worthless.
You think the cash in hand wouldn't? Some people say 3 months, 3 weeks to 3 months, and your window is what? What would be your window for? Okay, the cash is going to get really hammered. Have it in hand is good when everything shuts down, but the cash is going to get hammered. What's your window for how long? What's the expiration date of the cash you have?
2 to 4 weeks.
Wow.
Yeah, I think people will figure out within 2 to 4 weeks that, a farmer's gonna think, well, hey, wait a minute, I'm not gonna give you eggs for a piece of paper. They'll give you eggs for silver.
And what do you suppose will happen at that point? Will we be forced into some new currency, some new paradigm, what would happen after, if the cash is your 10s and 20s, it's so beautiful with the little bands and little, holograms in it and all that, whatever, the little opaque thing. But anyway, what would happen? Would we get it? What do you think would happen? How would we finally fix this where we could, do business and pay people? What would happen?
Well, we think that there's going to be two resets. The first reset will be man-made, and that will fail, and it probably will fail in a fairly short period of time, maybe a month, 3 months, maybe as much as 6 months. But the second reset will be Mother Nature made. In other words, no currency is going to come forth unless it does have some real backing. And obviously, the history shows that the best backing is with metal.
And do you think cryptocurrencies have a chance? There's a lot of people thinking that money will just run to whatever they could get out of the currency into anything they can, whether it's gold or silver or platinum or rhodium or farm ground or cryptos. Do you think that money's just going to run? We got so much money sloshing around all over them. We have money and we have debt, but somehow we can't take the money and pay off the debt. But would that do well as well? Even though I know it's probably not your favorite asset.
I do believe that the world will go to cryptocurrencies. When I say cryptocurrencies, I think that's what central banks are going to actually issue. And that way they'll be able to track absolutely every transaction you make. But it's not going to be the current cryptocurrencies. I think central banks will issue their own cryptocurrencies. And you just mentioned you got cash on one side and debt on the other side. The whole problem is there's so much debt that it can't be paid off. That's the problem. There's not enough money to pay the debt off. The money doesn't exist yet to pay the interest. So they have to continually print more and more currency in order for the new debt to be paid. And that's the problem. It's like a treadmill.
At some point, do you just not able to run on the treadmill? You end up, going so fast you just boom, boom. You just fly off the treadmill.
Well, I think that's where we are right now. I think the fact that the real economy is slowing, it's going to be throwing off less cash flow, and it already is. I mean, you could see that in the fourth quarter, and with the coronavirus, and with companies. Whole cities that are shut down, the cash generation is slowing, and that's going to cause a problem with servicing the existing debt. And actually, Greg, this week I think we went 3 days or 4 days where there was no investment grade debt issued whatsoever, and that's not happened since going back to 2008. And if you look at the stock market over the last 3 years, the reason stocks have gone higher is because corporations have borrowed money to buy their own stock back.
I mean, this is looking bleak.
Well, yeah, it's like every trick in the book is now under fire.
2020 is the year we get this debt reset, we get this calamity, we get whatever. I'm sure Donald Trump, who I like, would have liked, because he walked into office with 41 trillion in debt, with the 20 trillion in the missing money, 21 trillion that nobody wants to talk about, but it's a real number that was gotten out of using Office of Inspector General report to DOD and HUD, and Dr. Mark Skidmore did it, and Catherine Austin Fitts were on the cutting edge of all of that. It's a real number. It's real money. And it really happened. And so, but this is the year that all this stuff blows. Is that what you're saying? 2020 is the year when we hit the end of we hit the wall?
Well, it's happening. It's happening now before your eyes. It's been happening. Go back to September 18th. With the repo market beginning to seize up, that shows you that the most basic of basic credit functions, the plumbing's not working.
And what would you're kind of a blue collar guy like me. I mean, you pave driveways, and I worked in a can plant and on a farm, and we've had plenty of black fingernails from pounding ourselves with a hammer and whatever. But what does a little guy do? Please explain in your the simplest of terms what people should be doing right now.
Well, it's late in the day, but you want to try to, as best you can. You want to try to get financially out of the system. In other words, have gold and silver. That's because they're nobody's liability. You don't want You don't want to depend on someone else to have to perform for your finances to perform. And become as self-sufficient as you can. Put some food back, put some water back, have a way to purify water. Plan on uh, what's happened in China. What is it, 3 weeks, 4 weeks now that some of these cities have been in lockdown? How many people can say that they could go 30 days without leaving their house or going to a grocery store?
Oh, that's a good point. There's your real world example of
Yeah, exactly.
you,
Yep.
you need to be prepared to stay in your house for 30 to 60 to 90 days if need be.
Well, yeah, and it doesn't, not necessarily even because of a pandemic or anything like that. If the financial when the financial system comes down, you're not going to want to be out on the streets. And when the system comes down, Walmart is not going to have products for you to purchase anyway. So, and I've said this umpteen times over the last I don't know 3 years, that once the credit markets break, distribution simply will not happen because the entire world runs on credit, and it is credit game over.
You think credit game over is unfolding in front of our eyes right now? Credit game over unfolding in front of our eyes now.
Absolutely.
We're in tight short times here, aren't we?
Biblical times.
I mean, this is going to wait until this fall, till October or November.
Uh, it's a process. It's a process, and when is the day that the light switch goes off? I can't tell you, but it's happening right before your eyes, and it's been happening since this past September, with the repo market plugged.
Yeah. But somebody's hand is reaching for the switch. Somebody's over by the light switch.
Oh yeah, absolutely.
Right.
And Craig, it's obvious you can't live on a credit card year after year after year.
And
The,
Trump's
the,
trying to take us into bankruptcy in some way, shape, or form. Isn't that right? I mean, we were never paying the 20 trillion back, the 40 trillion, the trillions of dollars. We were never paying that the day he got into office. I mean, they're never paying this back.
no, it's not possible. Not in current terms. They may pay back 20 trillion. They could print one note that says 20 trillion on it, and technically they paid it off. But in current purchasing power terms, there's no way it can ever be paid back.
And they couldn't have paid it back, at the end of the Bush 43 term. They couldn't have paid it back at the end of the Obama term. They sure in the
Right.
heck aren't going to pay it back now. I mean, he'd crashed the economy. I think Trump realized we're never paying this back. I mean, people don't realize we're never paying this back, y'all. Oh yeah, we'll pay it back. We'll tighten up. We'll have austerity. Yeah, we'll cut a few things here. And they couldn't cut $85 billion out of the budget. Remember that? Remember the sequester? They could 85 billion for a year. 85 billion. Couldn't cut it out.
Well, again, Greg, if we ran a balanced budget, we would find out that the economy is shrinking by 5% or more every year.
I hope one of these crazy socialist communists, don't play the magical flute and draw everybody over the cliff to communism, godless communism. I mean, I worry about that in an election year.
Right. Well, it's historically socialism comes forward during the most dire of times when people want an answer. They want hope. They want to believe in something.
And they just end up being broke and murdered.
Yeah,
I
exactly.
mean, that's the story of communism. 100 million dead, 150 million dead. I've heard lots dead. When you add them all up, Russia, Marx, Lenin, Pol Pot, all the stuff in China. I mean, it's millions and millions of people. Have
All of those businesses came about after guns were confiscated.
Germany. Yeah.
Yeah, every one of those came about after people had their guns confiscated.
Yeah. Yep. Anything closing remarks you like to make here? That you like just to wrap it up here?
Uh, just get prepared. When I say get prepared, think that you may need to be on your own for a month or 2 months. Make a plan, implement it.
And you have jsmindset.com. Your business partner is Mr. Gold, Jim Sinclair. A lot of what you're saying, you and him talk about on this weekly podcast you guys do. You write a lot of work that you put into you're behind your paywall, but you also have work that you put out in front, too, for people on jsmindset.com. I love that. Tell me, how much does it cost to be a member, and what do you get?
It's $129 a year. I had been writing 2 subscription articles per week, and I had a couple weeks ago kind of taken a little bit of a hiatus. How many times can you write on the same topic from 100 different angles? But we do a weekly call that's an hour long, and we're more than likely going to begin to do that weekly call and then a shorter midweek call. So it's like 50 seminars a year.
And you get access to you have deep experience, and Jim Sinclair, who I really have a lot of respect for and like. And you think the price of gold, it could be these many, many multiples higher here. If you take the average, if you take how much, here we had 83 or 82 tons, whatever it is, and you look at all the money printed, you're thinking that there's going to be a very large number for gold and or silver in the not too distant future.
Well,
not next week or month or next year, but
no. But if you take the amount of debt outstanding from the U.S. Treasury and you divide that by the amount of ounces we supposedly have, and I say supposedly because there's a good chance that a lot of that's going out the back door. But if you take the official numbers, you come up with almost $90,000 an ounce in order to pay back the national debt with the gold that we supposedly have. And that's just pure math. The trolls are going to go crazy saying, oh, Bill Holter's predicting $90,000 gold, but that's just pure math.
Bill Holter, the website JS Mindset. I'll put a link up for your podcast every week and the stuff you do write. I'm sure you're not going to completely stop writing. You're a good writer, and you've been prolific in the past too. But Bill Holter, thank you for joining us today at this critical time on USAWatchdog.com.
My pleasure. Thank you, Greg.